we'll try and get a sense on what's driving sentiment in the FX market. If we take a look at the data there for the FX market that closed yesterday, we see the Naira hit a new low in the official window. If you can put up that data, we see that there's a lot of pressure in the official window. We're not used to that. We're used to seeing that, in the parallel markets, at this time. But that's the true picture, at this time. Let's bring in Dumebi Oluwole now. She's going to be telling us what's driving sentiment, a senior economist at FDC and STAIRS. Dumebi, let's take a look at this market now. It's really a pressured market at this time, talking about the Naira at the official window. Mm-hmm. And we didn't expect this, at this point, even though some will say, fine, we get the spread. Last time there was, the spread wasn't this big, between the official window and the parallel market. Now the official window has met up with the parallel market, somehow at this time. And I'm hoping the spread doesn't get even wider going forward. What are you seeing?
I mean, we did expect it. Because dollar illiquidity is still a very big problem in Nigeria's FX market. So that's one of the reasons why you're seeing so much depreciation in both the parallel market and the official market. This period, we're seeing a lot of increase in FX demand. Businesses are trying to order, build up their inventory for the year or for the quarter. International school fee payments are also happening as well. People are also trying to hedge against the higher, flight ticket prices for the Easter holiday coming up at the end of March. So you're seeing a lot of increase in FX demand, and still, supply is still quite thin to meet up that FX demand. And remember, Nigeria's FX market is still facing a lot of issues when it comes to the fact that supply, there's still the FX backlog. Crude oil earnings are not so sufficient, so that is feeding into how much dollars the CBN has to defend or even supply to the FX market. And there's still quite some regulatory concerns that are significantly impacting investor confidence negatively and fueling speculative attacks. So that's exactly why you're seeing a lot of pressure on the Naira right now. Even
though we did hear, the CBN said about $500 million injection. Yes. $500 million, into the market, but still.
Yeah, I mean,
speculators should be like, oh, okay.
So when you weigh $500 million on FX backlog of over $6 billion. Consistent FX demand over about $1 billion almost on a daily basis.
But this should inspire some confidence.
It should. But again, we're already at a point where you need a lot more than policy statements and stuff. And the thing is, this is not the first time that these injections are happening. Maybe not this large, but we've seen the CBN had come out say, okay, they've actually cleared the FX backlog for about 14 banks, even though it was not so clear how much that amount of money was. But still, you see that the policy statement and the CBN coming out saying, okay, we're going to do this or we're doing this, has not yet anchored investor sentiments positively. It has not been able to shield the markets from speculative attacks. And what that goes to tell you is, right now, Nigeria's FX market has gone beyond the point of policy statements and communication. The markets need to see significant inputs or significant injections of dollar inflows that do bring down, the negative sentiment of, okay, we're hearing there's dollars, but we're not actually seeing it in the market. The students that is trying to pay for their international school fee should be able to do that seamlessly. Go to the bank, I want to pay for this. You get your school fee payment, done. You're going to apply for your BTA. You don't have to go to the parallel market. When those policy statements start to trickle down to the market in action, then you'll begin to see a lot more positive reactions from the speculative attacks or from the market, and that would actually boost up investor sentiment. Because right now it's just like saying you want to go to the market to buy pepper. You're hearing on the news that pepper prices have reduced, but when you go into the market, pepper is still very expensive. By the time that happens to you, it happens to another 500 Nigerians or another 500,000 Nigerians. It fails to help the market in any way. So that's exactly what is happening. What is on ground is not yet,
Definitely we're dealing with, two heavyweights here.
Yes.
Rising inflation, currency devaluation.
Yes.
Talk to me about paint a picture of how much this is impacting, prices in the commodities market and my pocket.
Okay, so which do you want to start with first? Commodities market?
Commodities market, and we come to my pocket.
Your pocket, fantastic. Right. Okay, so looking at the commodities market, I would say right now one of the key drivers of inflation is exchange rate depreciation. And this is because of the pass-through effect from the exchange rate market to, imported food items, and even to the woman that is selling groundnut on the road. If you ask them, why is the price of groundnut? They say, dollar. There's no dollars. So you've seen how it has been able to move from the FX market in itself to our daily lives. And what this and aside from exchange rates feeding into inflationary pressures, there's also the fact that money supply has also significantly increased. And when you look at the reason how this happened and how this is even fueling inflation, you'd understand why. Currency in circulation has significantly increased. It has increased over 30% year on year. And when you look at what happened between the cash scarcity period, after we removed some cash from the system, we brought in new cash, so that, and then we put back the old money into the system. So combining that together, you have like a double effect or a twin effect on money supply and cash in circulation. And because people are still not so aware that you can actually spend both the old notes and new notes, you're still finding people holding their Naira. And that's one of the things you saw happen in Q4 during the festive period. So that put together is also fueling inflationary pressures. You're seeing that an increase in money supply is pushing, even though demand has not significantly increased, but you do see that is also somewhat supporting or increasing inflationary pressures. Then you also backtrack to see all the other structural issues that are still affecting agricultural productivity. The longer agricultural productivity stays down, that continually feeds into lower supply and then feeds into food inflation. Food items in itself account for over 50% of Nigeria's of the items in Nigeria's inflation basket, meaning that as food prices increase, we will see a significant increase in the headline inflation, and that's exactly what is happening. Now to your pocket. Yeah. The longer inflation stays up, the real value of your money continues to decline. So except you're earning in dollars or earning in pounds, the value of your income is significantly declined. Let's take for example, you would usually spend 100,000 Naira. I think I can even attest to that. Right. Going to the markets, buying baby food.
It's almost scary now.
It's almost scary. I mean, my daughter's milk has increased from 17,000 to 23,000. So you find that the value, as prices increase, the money that you would usually earmark for certain expenses have also increased. And it's not like the value of your Naira value of your income has also increased. So you just find that shock to your income, and then you find that you're spending it a lot more, and your salary isn't significantly.
I think it's come to a point where we all have to collectively agree that every activity that brings weakness to the Naira, we have to put a stop to it. At this point. Hashtag strengthen the Naira, because it's getting bad. I don't want to see the 2,000 Naira mark. I don't want to see it. But I hope we're not heading there at this point.
Yeah, we all hope so at this point.
So talk to me now. We saw that headline yesterday, report from Bloomberg, showing that Dango Refinery is looking at importing oil from the U.S. We're an oil-producing nation, at this point. And I think we're secured about 300,000 barrels per day, for the Dango Refinery. But they need about 650,000 barrels a day.
Yes, they do.
So why are we not meeting that demand? Why are they having to go out?
So I did mention that we're having issues with crude oil production. So aside from the fact that we're having issues with crude oil production, meaning that we're not producing enough, there's also the fact that quite a lot of our future oil has been locked in forward contracts. So this, we have crude swap deals. You also have the forward contracts where you lock in oil to collect cash. And this just means that some of the oil that's coming out of the ground has already been paid for. So that
some of the oil sitting in the ground right now
has been paid for. Yes. So and we have to meet that demand, because we've already collected some of those monies. So we have to meet that demand, and that's one of the reasons why you're seeing Dangote go into the import market to get some crude oil. So that's one of the reasons why. I think another thing would be another issue that is feeding into this is the ability to consistently meet the demand of the refinery. So when at first there was the concern, oh, Dangote Refinery hasn't started. Now it has started. It needs crude oil supply to come in as quickly as possible. So, but that consistency, there's also some lag there, and that's also fed into why the refinery or company has decided to import. Now, what this signals clearly for Nigeria, especially in terms of, I know we're not talking about gas production now, but it does shed some light or spotlight the reason why some international bodies and like IOCs, investors are still very wary about Nigeria's oil and gas sector. And I'm speaking about gas now because we've seen an increase in interest for that transitional fuel. Nigeria is on the table for supplying the global market, but with the fact that the upstream sector issues that are affecting crude oil are also affecting gas, it does shed some, I would say, bad light on how Nigeria will be able to actually produce this natural gas or even crude oil in itself, and then be able to supply the external market. So this particular issue has significant, I think it will continually douse investor sentiments, even with the petrol subsidy removal that we've done. The reason for the petrol subsidy removal in the first place, one of the reasons why we did clamor for it, was because it was not making the price of crude oil cost reflective enough for players in that sector, including all the other issues that they were facing. Now it has been removed, even though it's temporarily removed. We're still seeing that investor sentiment is still very low, and these are the issues that are fueling that.
But at this point, what if, because we're trying to ramp up, oil production.
Yes.
Take, for instance, we were able to get up to, 2 million barrels per day, but we still have that, quota limit from OPEC.
Yes.
If we're able to meet that, can we give the Dangote Refinery more oil?
Yeah, I mean, if we're able to meet the target, that's a very big if. Again, I will continually speak to the issues that crude oil production is facing, because we've seen how it has been detrimental to Nigeria's ability to even produce about 1.2 million barrels per day, even 1.3. So OPEC has reduced our quota again to about 1.5. That's more achievable. In our budget, we have a production quota of, I think, 1.68 or about 1.7, meaning that the government is quite optimistic about this oil production prospects. But it's a thing now of when we see it, we believe it. And unfortunately, that's the sentiments that investors are also having. When we see an oil production of 1.4 million barrels per day or 1.5 million barrels per day consistently for a period of about 6 months or even a year, then we believe that, okay, there are some bright spots there. So it's more of a wait and see game right now.
Because when I saw that story, I got a little sad because I was expecting that at some point, if I go to the filling station and demand for Dangote PMS, be able to get it a little cheaper, even though they said it's not gonna doesn't make it cheap. But now it seems like it might make it even more expensive. He might have to sell higher at this point, even though because he's having to import oil. But that out of the way, we did see NNPC's results for 2022. We're going to be drilling down on what drove that result. That's on Business Incorporated. We're going to stay tuned for that at 1 p.m. We'll be drilling down on NNPC's result for 2022. But back to the conversation now. The oil market, we're seeing volatility is there, but it's looking like it's going to the upside at this point. So we're seeing Brent $82 a barrel, up about 0.7%. Is this a trend, forming?
I mean, yes, simply because of the geopolitical tensions that we're seeing. The tensions in the Middle East are escalating. Russia-Ukraine war is still very much there, and we're seeing that even the U.S. as well is somewhat struggling with its production. Production declined in the U.S., and we're seeing them really draw from their crude oil inventories. So these are some of the issues that have significantly impacted oil prices. And the prediction right now is that oil prices will continue to increase. Even though we don't expect that it will surpass $90 per barrel, at least now, the expectation is that it will continually hover around $80 to $85 per barrel, at least in the medium term, just because these tensions are still pretty much on the upside.
Right. So we're seeing supply, issues, at this point, driving sentiment.
Yes.
We also have demand at the end of the day, with what's happening in China.
Yes. So that as well is also feeding into oil production, oil supply. But then the bigger picture here, I think right now is more on the supply side of things, how that supply is likely to reduce. OPEC is still being very conservative with its supply. If you notice, the production quota for quite a number of countries were also reduced. And even though a country like Angola exited from OPEC, its production capacity is not still enough to really nudge oil prices to decline. So essentially, supply constraints are the major drivers right now of oil prices, increasing, and we expect that trend to continue at least for the first quarter of the year.
Right, and 2023, moving away from the oil market now. Rate cuts, rate hikes.
Yes.
We're in 2024 now, and at the end of the conversation now is about possibilities, of a rate cut, but somebody's already way ahead. At this point, our neighbor, Ghana, they're already cutting rates.
Yes.
What's happening?
I mean,
too early?
I wouldn't say it's too early. And the reason is this: we try not to look at Africa as a country. Every country has unique issues that affect them and that influences the central bank's decision. So even though the global economy is, still interest rates are still high, there are prospects for rate cuts probably by the end of the year or even in 2025, simply because inflation in the US is not yet at the 2% target mark, but it is getting closer. Same thing with the UK. Same thing with the ECB. There are even chances of the ECB probably cutting rates early in 2024. The point is, inflation globally is already declining, and interest rate cuts, monetary policy, there are chances that it would loosen later on in the year. But speaking about Ghana specifically and other countries in Africa, Ghana's inflation has significantly declined from about 54% to about 26% now, and there are chances that inflation rate will consistently decline. Ghana has also been able to try to get to the debt restructuring talks with G20 countries. So there are prospects that its debt situation will probably start easing soon.
Right.
And there are just some bright spots for the Ghanaian economy at the moment. I think Ghana also has its elections as well. So pretty much the expectations that prices will continue to decline, and the government is trying to ease borrowing costs to allow businesses increase their expansion capacity, increase output, just to support the economy. So the logic behind it is pretty much sane, and it's not too far-fetched.
Right.
Cutting rates at this point in time from when, and I think Ghana did increase interest rate, I think by over 1,000 basis points last year. So I wouldn't say they are too far-fetched or jumping the gun by cutting rates, considering that inflationary pressures are already cooling.
Right.
So I think it's still pretty much a good decision.
At some point I'll start reporting rate cuts in Nigeria.
I don't think that will happen now.
Dropping, but Mr. Rani has said it. Heavy lifting in 2024 before we see some kind of soft landing.
Exactly.
Thank you so much, Adumabi Oluwole, senior economist from STAIRS and FDC. It was great having you.
Thank you for having me.
Thank you.
Thank you.